Joining me now is Aditya Bhave, senior U.S. economist at Bank of America. Aditya, welcome. So what happens to concerns about a K-shaped economy in 2026 and this theme of affordability in the political discourse?
Thank you. Good evening. So let's start by talking about our forecast for next year. As you noted, we're quite optimistic. 5 tailwinds. What are they? First, fiscal policy. We think the stimulus from the big, beautiful bill for CapEx for consumers adds 3 to 4 tenths to GDP growth next year. Second, the lagged effect of Fed cuts, so that's monetary stimulus. Third, we think the AI-related tailwind should continue next year. Fourth, we think trade policy is going to be more supportive for growth next year than this year, and that's true regardless of what happens with the IEEPA tariffs in the Supreme Court. And then fifth, the base effects from the shutdown should also be helpful for growth next year. So what happens to the K-shaped economy? Our base case is that the lower part of the case, so lower income spending, stabilizes, supported by upper income spending, which should eventually put a floor under the job market.
So is it still a K?
It's a K, but it's not the kind of K that one would be really worried about. So there's different types of Ks, right? What's the most worrying type of K? The most worrying K is one in which upper income spending is just about holding on and lower income spending is outright weak. What we're seeing in our card data, by contrast, is that lower income spending is holding on, whereas higher income spending is outright strong. So it is a K, but it's not the most worrying kind of K. And we think that eventually, if this continues, higher income folks, they tend to spend more on services. And that should mean that eventually this is a very blue-collar, service-driven economy. And eventually that should help stabilize the labor market, as I mentioned earlier.
Yeah, it sounds like so much does depend on the labor market. How much does the labor market depend on interest rates continuing to come down and not just hold steady?
It helps. So the cuts that the Fed have done help a certain degree. The other thing that we find quite encouraging is there's obviously this chicken and egg relationship between the labor market and the consumer over extended periods of time. But what we found is that it's typically consumer spending that leads jobs rather than vice versa. So the stability, I would say perhaps more than stability, resilience in consumer spending that we've seen over the last few months, I think bodes quite well for the labor market going forward. Now, again, we're not talking about a significant acceleration, but we're talking about a world in which the unemployment rate stabilizes around where it is now and then eventually starts dropping in the back half of next year.
Is consumer sentiment going to shift, and does it have to?
It doesn't have to. I don't know if it's going to shift. It's difficult to predict how people feel. Obviously, sentiment has been disconnected from consumer spending for the last 4 years, which is why I'm saying it doesn't really have to shift. We've had an extended period of strong consumer spending with weak consumer sentiment. So that could continue for a while. There's other reasons for weak consumer sentiment, likely related to the cumulative increase in prices, so price levels rather than just inflation over the last year, and also political polarization might be making things worse.
Speaking of which, we got midterms. How does that enter into your picture and all of the talk about affordability?
It's obviously a big point of focus. We think that the incentives for the midterms probably lean this administration towards being more favorable for growth on trade policy over the next year, which is why I said, look, if the tariffs don't get overturned, then we think the administration will move very quickly towards delivering good news on trade. Perhaps a deal with China to bring down the fentanyl tariffs, perhaps a renewal of the USMCA. But we think the administration will certainly be focused on delivering good news for the stock market and for the economy on trade policy.